Welcome to Bears in Exile. Today is Wednesday, March 7th, and this is the market overview. Looking at the Dow, SPX, VIX, TNAU, UPFX, EGLD, SLV, XOY, XLF, Apple, GE, CompQ, and that's it. Alright. Well, today was not exactly what I had hoped for, but it wasn't really unexpected either. After yesterday's massively wonderful down day, I knew that there was the possibility that we would have an up day, especially going into the long-term moving average bar, and that is exactly what happened. That's why I didn't want to, proclaim that from the rooftops that the game was over and the Bears had won, even though it looked very nice. So today on the Dow, 78 points to the upside, getting right almost to the midpoint. Actually, it kissed the midpoint and backed away slightly, but we've said in the past, long bars, resistance is at the middle, or at the top, or at the bottom, depending on which direction you're coming from. We got above the major price consensus level today and backed away from it, closing below it. Not exactly a great sign for the bulls, but they have the long-term moving averages to help them along. So some sideways movement and wearing it down, if indeed this is the downturn, would be completely natural at this point, and for the long-term moving averages to render support is also to be expected. 14-day RSI moving average ticking down, stochastics ticking down, RSI ticking up, CCI ticking down, down on the MACD, down on the MACD histogram. At first glance, it does not look great for the bulls. Not the end of the world, but not great. And there's going to be much more to talk about that here in a minute. I'll go to the NASDAQ next. Yeah, they had a fairly decent day, getting above the major price consensus level. We do have the crossover of the middle Bollinger Band above the short-term moving averages, that is bearish, and 14-day RSI moving average ticking down, stochastics down, CCI and RSI up, down on the MACD, down on the MACD histogram. Pretty mixed. Pretty mixed. SPX did better than the Dow. Closing above the major price consensus level, we do have the cross of the middle Bollinger Band, and 14-day RSI, stochastics ticking down, down on the MACD, down on the MACD histogram, up on the RSI, up on the CCI. So also mixed, also crapping out right about the midpoint. So we need more data. Tomorrow is the all-important Greek deal, and that should be the king of NDEs. Absolutely. So be on the lookout. Depending on what happens, I mean, it can definitely go either way. I mean, that's just the nature of the beast, and although the odds are low that they are going to miss a payment, if they happen to do it, wow, we could go into a cascading waterfall with the short-term moving averages. That would be beautiful, but I'm not going to keep my hopes up. The VIX, ooh, ugly. It was very unfortunate that the VIX could not hold above 20. I realized that it was outside the upper Bollinger Band, and it should come down. But nonetheless, 20 is a magic number, and 19 is not. Got a downtick today. Downtick gives us a target right about the right at 1850. We could see some more down on the VIX tomorrow. 14-day RSI moving average ticking up, stochastics still moving up, down on the RSI, down on the CCI, up on the MACD, and very slightly up on the MACD histogram. Not really pretty. Long-term moving averages should offer resistance, and obviously they are. Everything's going to depend on the news, the Greek news tomorrow. It's just a fact of life. XOY, oil. Inside day, not exactly good for the bulls. Ending with a giant spinning top, closing above the major price consensus level. We do have the cross of the middle Bollinger Band line. 14-day RSI moving average ticking down, not yet crossing the 80, so acceleration should not be a big factor at this moment. Stochastics mixed up on the CCI, up on the RSI, down on the MACD, down on the MACD histogram. Long-term moving averages should catch it, and that is what they're doing. TNA, oh boy. Not unexpected to see the price get sucked back into the long-term moving averages. I believe that we touched on that last night. We do have excessive separation in the short-term moving averages. We do not have an uptick. And this is also inside day. Not exactly good for the bulls. Not the end of the world. 14-day RSI moving average still ticking down. Stochastics holding low. Up on the CCI, up on the RSI, down on the MACD, down on the MACD histogram. Getting some chop and collapse in the long-term moving averages is what we should see in the immediate future. Hopefully it won't be ejected, but and hopefully it will just stay here and collapse it. It did close above the 200-day moving average today, so could have been much better for the bears than it was, but it is what it is. Oh yes, now what we were talking about with the Dow, with more to come. UUP, this could be the market's saving grace at this moment. Spinning top, red. Bearish engulfing. We have excessive separation in the short-term moving averages. We don't have much of a long-term moving average bar. Secondaries look pretty good. 14-day RSI moving average ticking up. Stochastics mixed but high. High on the CCI ticking down. Down on the RSI. Up on the histogram. Up on the MACD. But bearish engulfing. I don't like that. And I don't like the positioning of it looking like it could crap out before this peak over here. Now the news in Greece tomorrow is massively going to determine what this does, but just upon the candles and their positioning, I don't like it. FXE, more of the same. Spinning top green, bullish engulfing. Not much of a long-term moving average bar. 14-day RSI moving average just getting underway to the downside, crossing the 80. Stochastics mixed, but seemingly low. Up on the RSI, sideways on the CCI, down on the MACD, down on the MACD histogram. I just don't like the way that this appears. It would appear like a wave, and we don't want a wave going up. We're probably going to get one. And so yes, that could set up a lower high from which it could get a lower low, but for tomorrow, I just don't like the positioning, don't like the way that this looks. And of course, excessive separation, ugliness in the short-term moving averages, a mess. So an up move would be likely. Not good for the bears. XLF, the financials. We're getting the squeeze with the Bollinger Bands. Starting to expand slightly. Still have the middle Bollinger Band above the short-term moving averages. It stopped, but cold, at the major price consensus level today. 14-day RSI moving average ticking down along with the stochastics, along with the MACD histogram and the MACD, but the RSI and the CCI ticked up. Getting stuck right above the long-term moving averages, which is what it's supposed to do. We do want this to sit. We do want to get a little bit of penetration, and then we want the bar to begin to collapse. Hopefully we'll see some of that tomorrow, but with the move in the dollar and the Greek news and the euro moving, we just don't know at this point. Apple. Oof. Had a nice move up today. Yeah, it was red, but overall, it didn't do too bad. We talked about last night about the downtick target being met, and we need to see what happens. Formed a hammer today. 14-day RSI moving average continuing to tick down slowly, down on the stochastics, down on the MACD histogram, up on the RSI and the CCI. A long ways to go until the major price consensus level and the bar. And I do personally believe that now that the announcement is done and out of the way with the iPad, notice not iPod, iPad 3 announcement today, which wasn't really well received, now perhaps we have the chance at a bar retest. GE, trying to get a better read on the Dow. It was low, and it's getting sucked back in. That is natural. We did get an uptick. Ooh, not good for the Dow. Well, good for the Dow, bad for the Dow Bears. Giving us a target right at 1895 roundabout. Yep. And yeah, a couple of dimes to go to meet that target. But I do think that that is entirely likely as this exerts its influence to pull the price back up. 14-day RSI moving average ticking down, stochastics mix, CCI up, RSI up on the histogram, and slightly down on the MACD, and this should lead the Dow. So this going up a little bit means a little more up on the Dow, most likely. GLD, the second VIX. Oh, look at that. Yeah, the dollar was down slightly today. Gold was up slightly today, but I still think that this is a good read on fear, and being above the 200-day moving average is a good sign for gold. We do not have a downtick. We do have excessive separation. There is a bubble here, so we should have more up on gold, although the 14-day RSI moving average is still ticking down. Stochastics locked in the lower position. Side tick on the RSI, uptick on the CCI, down tick on the MACD, down tick on the MACD histogram. Being pulled back into what's left of the long-term moving averages would be completely natural. It's only $3 away. Easy to do within a day or two. And SLV. There you are. Ending with a spinning top and a no uptick. Essentially identical to gold functionally. So although the MACD is ticking down, not much to say about silver. Just not too much. Is there anything else that I can look at while I'm at it? Nope, I think that that's going to be it. So, not a huge surprise. Would have been nice to have had another big down day, but just not in the cards, and tomorrow could really bring anything. So, be on your guard, and as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.